What's going on, guys? JPA Trades here. Going to be going over our SPX play we did to end the week off right. So with that, before we get started, I want to say thank you for everybody for liking and subscribing. It means a lot to me. And let's get into the video. So first off, SPX versus SPY. SPX and SPY are essentially the same exact thing. SPX just has much more volatile and both lucrative and destructive options. So what I'm saying there is the SPX options can really work in your favor when they're right, and when they're wrong, they can just kind of blow up right in your hands. So just kind of going through there. Another question I saw a lot is, I can't trade this on Webull. You cannot trade final hour SPX options on Webull, so you need to use, I know E-Trade is the broker I use. I believe Thinkorswim and TradingView, not TradingView, what's it called? TD Ameritrade can also trade it, but a lot of kind of panic, whatever, don't know what's going on. So basically E-Trade is what you use there as a brokerage fee, but just go from there. So here's what happened. So 345, we initiated this SPX. So by the time we hit 350, it's already up over 100%. So you go, okay, 5-minute trade, 100%. How do I do that every day? And how am I not a millionaire yet? How did I not quit my job? Well, the first thing you need to remember is there's only 15 minutes left in the trading day when all this is happening. So what I like to do is just 1-minute charts so you can kind of see everything going on. So right here, here's our dip, 345, and you go, oh my God, how did you time that dip perfectly? Are you a wizard? Are you a market maker? And the really easy answer is no, I am not. So this is TrendSpider. They're running like a 55% off sale. A lot of other charting devices out there, but if you want to step your game up a little bit, it's pretty cool. But let's see what happened here. Oh my gosh, they almost aligned perfectly. How can it be? So, and there's not, don't get me wrong, there's a ton of great opportunities. The short one 4,000 happened and it fell the whole way under on a 0 day to expiry SPX. So you could have taken puts way earlier in the day and made a bunch of money. It just so happened that and you could have taken puts here and made a good portion of money, but I'm forever the optimist. I'm always leaning calls, but it worked really well here, just buying off of that previous because we saw I saw the last time we were at that 3,900 psychological level. What do you see? You see almost a 100-point rip up, so you know that that's very strong, where you don't necessarily know how strong this rejection is going to be. So yes, it fell under 4,000 and there was a big sell-off, but it's hard to kind of predict how big these sell-offs are going to be, and especially with SPX options, they're very expensive during the trading day, but they get extremely cheap and they're extremely volatile near the end of the day. So you're saying, okay, you went from 39.06 to a high tick of 39.27. You're $2 in the money. Those options should be worth $2, right? And that's where it starts to get really interesting with how these options can move. So you can see here, there's the 113% in 5 minutes. Well, in 15 minutes, it's 862%. And what actually happened is it was over 1,000%. This was just the best screenshot I could get because literally just in a second it moved. And what do I mean by that? So here's the candle for the SPX options. It spiked up to almost $5 in a 1-minute candle. So you could have still gotten in for that 50 cents, the candle before, and then just boom, in and out. So, well, that's great, but how do you know when to get in and get out? So one of the most important things for options trading, and especially SPX trading, is limit orders. So you need to be able to set the limit, so you can say, I will willing to pay 40 cents for this option to get your buy. So this 40 cents repeated multiple times throughout that final 15 minutes that you could have gotten filled for 40 cents. It went under 40. It was down to 30 cents, 35 cents. So if you had 40 cents in, there's no issue getting filled in SPX. It's not a thin OI name. It's not a penny stock. Billions of dollars worth of SPX options get traded every day. So you do not have to worry about getting filled or not. What you need to worry about is getting bad fills or chasing it or doing something crazy. And what you also need to worry about is exiting. So in the end of the day, as soon as I buy these SPX options, I'm setting my sells in them. So I have just a default 50%, a default 100%, and then I'll put something crazy in like a 500 and 1,000%. Like I got 4.0, and I was just like, what just happened? So I had to see what happened. So it was just literally just in the one. If you go and look at the day, I like to do 90 minutes just to look at the whole day. It just boop, boop, all the way down. You just have that. It doesn't even, just have that one, it doesn't even register as what happened there. But you can still see that bottom that occurred, but it looks like it's telling you to get a little bit higher here. So, I mean, you still have that same bottom wicket, 39.10, 39.14. So you're still seeing back, but you're not seeing what happened the previous day. So when you're kind of looking, you want to be almost as nitpicky as possible for these SPX end of days. You want to trade on what can happen. So let's say you're buying puts for the final 15 minutes. You say, well, if we break this support, it could go all the way down to 3,900, and then if it really breaks down, we could see more. But what's more likely? You just went down 100 points. Is it more likely to keep falling down another 100, or to maybe get 20 or 30 points of that back? And then there's also the psychology factor of it as you're going into the long weekend. Same way that you don't want to buy and hold anything into a long weekend. Someone who just made $1 million in puts in Apple and SPY and whatever, they're not going to be super advantageous and say, I'm going to keep holding all of my shorts or holding all of my puts into the close. I just want to get out of them. So you knew that the market, put holders and short holders, were profitable going into the close. So there was a good chance of some profit taking happening. Plus, you were also at a pivot point. So that's where you get that reaction move back up. And that's how we caught this. And I mean, a lot of I see some of you guys caught it. Some of you guys are like, what happened? Great entry. So it's one of those things where you need to really have a game plan in place before you go taking these, because you had 1 minute to sell. So here's 4.9. Next minute you're under 2.5. Next minute you're back down to 2.5, and they expired worthless. So you need to make a plan when you're in these, because if you just buy them and you don't know what's going on, you don't have your plan or anticipation of what's going to happen, you're inevitably going to lose money. So I don't always share SPX as much as I did when I first just did them all the time, because a lot of times people either go way too heavy in these, or they don't understand how to get in, get out, or they get shaken out by stop losses. So for SPX, you can't use a stop loss. You can't just market order in, market order out. You need to use your limit orders to pick your fills. You need to use your limit orders to pick your exits. And you need to only be putting in money you can lose. Like these just same way. If you could have bought them for $1 and sold them for 4.9. But if you bought them for $1 and then the next minute it's down to 30 cents, you're going to freak out and sell. If the next minute is up to 4.9. So you're essentially just swapping what's happening. There's so many institutions, so many large investors sloshing around in these type of options that there's so much money out there that you guys can just go and capture. You just have to be willing to only risk what you can lose, to have your plan going in, and not to don't just wing it. You need to have some strategy, and you don't have to be right every time. So I said this earlier today, it's okay to lose money to make some money. So if, let's say every time you do these SPXs, they work every 1 out of 2 times. Well, if one time you lose 100%, then another time you make 1,000, you're not very sad. But if you're doing it where you're only making 30% because you're just there to scalp it, and then other times you're losing 100%, you're going to end up disappointed, or at the very least, you're going to end up a lot of drained mental capital. So biggest thing, make your plan going in. You cannot do these on Webull. You need to use E-Trade or a more interactive broker, and you can research on whatever your favorite is and transfer over. And lastly, limit order, limit order, limit order. So with that, hope you guys all have a good weekend, and I will see you next time.